Thank you so much for having us. Love to be at the Sidoti conference and meeting with our investors. So to start, Spectra7 is listed on the Toronto Stock Exchange, Venture Exchange under ticker symbol of SEV, and OTCQB under the symbol of SPVNF. Today, our presentation is going to contain forward-looking statements, so just wanted to caution you that we do have an MD&A with all of the risk factors listed on our filing. I would like to welcome Ralph Aleem, our fearless leader, CEO of the company, to share a little bit about our background. Thank you, Ralph.
Thank you, Bonnie, for the kind intro. Okay, I've got a couple of slides and I'd like to present myself, and then I'm going to throw it back to Bonnie, who will really give you a lot of detail as well. First of all, if you think about Spectra7, it's a very, very unique semiconductor company. I've certainly enjoyed being at the helm now for 7 years, taking the company to the next stage inside the data center market. The company is highly differentiated, offers product offerings, go inside a number of cabling applications, which we'll talk about quite a bit today. These are all some high growth markets that really need very high speed cables to interconnect equipment. And most of all, we're focused now on the data center infrastructure, as I mentioned, with a very, very unique product offering that fills a critical need that data center operators have, that is between passive cables. These are just passive cables, just a plain old piece of copper, and optical, which is very high power and expensive. We go right in the middle, very, very big market, high growth, with a uniquely differentiated product that we'll talk about quite a bit. And the move that we brought into the market about 12 years ago was very, very attractive to a lot of high tier and high data center operators. We'll mention some of the names as we go through it, but we've been at it 12 years, 3 different generations of what's called active copper cables. These are devices that go inside either end of a plain old copper cable to make it a better conductor and a better citizen to carry high-speed data from end to end and address the needs of high-value data center operators. And we've grown our revenue very, very quickly. In fact, last year, we grew over 100% year over year, almost 110%. We're very proud of the growth of the company as our active copper cable chips get adopted by many different customers in many different end markets and applications. So I hope you guys can hear me okay. But we're very pleased with our current market position, the growth we're experiencing, the high visibility we have into some very attractive end markets as we go forward. And then on the next slide, I'll give you a little more detail on what we're doing. But in the top right-hand corner, you see a nice graphic depiction of sort of where our chip sits. So a copper cable has a connector on either end, of course, that plugs into, let's say, a switch or a router. And our chip goes inside. So our chip is very small and very power efficient and sits inside the connector on either end. And there's usually more than one chip, sometimes as many as 8 chips on either end of the cable. So a lot of content, a lot of value that we extract from this cable. Once you put a chip in it, the cable is called active copper cable. So it's a very simple distinction between just a plain old passive copper cable and a powered or equalized cable with a chip on either or both ends of the cable. So the cable basically does has a number of impairments, has attenuation, signal loss, distortion, a lot of other issues that our chip compensates for and makes the copper cable a better citizen, if you will, carries more high-speed data with less distortion when we have our chip on either end, equalizing it and compensating for the losses and distortion. We have a number of top-tier, world-name customers, or you might call them blue-chip cable suppliers. The list is shown on the bottom right here, but includes people like Luxshare, Amphenol, Molex. Molex is a very, very big manufacturer. Tencent, data center operator in China. Sumitomo, Samsung, many other top-tier names that you would recognize, household names and data center equipment operators that have adopted our silicon to compensate for their cable needs or address their cable needs and compensate for the losses of the cable. Very attractive market. As speeds and feeds go up, the need for our devices goes up dramatically. We're very excited about the high growth that we have already delivered and will continue to deliver. So with that, I'll turn over to Bonnie. Bonnie, please take it from here. Thank you.
Thank you. So in addition to the high growth and the differentiated market, we would like to also invite you to invest with us because of the management team. You know, Raouf Halim has been in the industry for 30 plus years. I myself been in the semiconductor industry for at least 17 years. Our two co-founders, John Mitchell and Dr. Kim, have been serving our tier one customers, even though we're such a small company, been able to derive 55 US issue patents to support everything that we do here. So it's really the team, and such a small team, but been able to do so much. And I'll share a little bit about how we've done it. So the address market that we have, we started the business with a consumer connectivity, mainly dominating the HDMI business. However, that has not been a huge market. AR, VR, if you take a look at history of this company, we had a history of serving a little company called Oculus in AR, VR area. And you can see our run up of revenue in the past years. And of course, when Facebook bought them over, we all knew what happened to the Oculus today, which is wireless. And so they did away with the cable. But as you know, we also have won the data center game console manufacturer win with a company located in Japan, offering service, you know, to most recently issue their headset. And actually, even though we're under NDA, I just want to say publicly, they have now there is a chip available or a picture available from their cable. Someone have cut it over and then shown our chip inside. So with that, I will just share that is Sony. So we are actually in the PSVR2 cabling, and we'll share a little bit more about that. And this has been years in the coming, so very excited about that. And mainly to demonstrate those two areas is to show you that we have a technology that's proven in applying it to data center. And so in 2017, the company pivoted under the leadership of Raouf to use our technology and target the data center market. And mainly, again, our chip is a analog chip that goes into the connector, and it makes the cable do high speeds transmission. So with that, there are other adjacencies that we could apply: automotive, switching, and 5G infrastructure. And all of this is really to show you that we are, our technology is proven, and that the application has been widely used in different areas. And now we're targeting the huge market that we're going after in the data center. But not to mention though, or not to forget to mention about the Sony project. To be able to serve a customer as big as Sony is a pleasure for us, and definitely a high focused customer, definitely. So you see in the history of this company, when we started to ramp in March of 2022, we really did a lot of backflips to make sure that we can serve this customer. And that included fighting for supply. And as you can tell, last year, the supply constraint was outrageous. And we did whatever we can to make sure the customer is happy, and we're happy to report that they are quite happy with us. And we see this as a multi-year relationship. And having said that, in addition to, we have also demonstrated AR/VR with our chipset, and there are 3 chips, 2 on either side of the headset and 1 going to the console, is enabling a very good experience for the consumer using this product. But the huge growth for us is definitely the hyperscale data center. So according to Delore, 377 billion needs to be spent by 2026 because of the YouTube generation, AI, ML, cloud services rollout. So data center operators in both sides of, you know, all parts of region are looking for better equipment. We all know that and share with you that Tencent has utilized our product in their mass production into their data center and started ramping in Q4 2021. And with that, we also have a relationship with all of the rest of the data center operators on the right here from Asia. And then on the left is North America. In North America, data center operators are looking at equipment that's coming out second half of this year particularly the 51.2 terabyte switches to enable higher bandwidth and throughput. And with that came the opportunity for us. So as they're looking at this higher throughput in the past, passive copper, which is what Rauf had talked about, is just basically a copper without any chips in it to enable higher speed. They will continue to, with higher speed, signal would attenuate and would not be able to get through without figuring out where the 1 and 0 is. And as that happened, it gave rise to the opportunity for us at Active Copper. And is a culmination between the data center operators in North America looking at the 800 gig to 1.6 terabyte connectivity with this new switch at 51.2 terabytes, and therefore giving rise to the need of abandoning or moving away from passive copper, which could not serve that need, and moving into an alternative. However, the alternative is not as compelling if you look at the substitute products if they don't use copper cable. In this slide here, showing you to the right, the substitute products could be the optical cable. And of course, they've been using that for a long time. And in fact, all the long connectivity within a data center outside of between a tower into the data center are all optical fibers, right? So fiber optics have been going through kilometers in length. And of course they could do that because they have a converter in it, as well as a digital signal processor, utilizing a fiber optics medium and being able to serve many needs for the data center. But they're very expensive, obviously, because they are using a converter as well as digital signal processor in it. And because of that, also using tremendous amount of power. Here comes a new class called active electrical cable, similar to an optical cable. The same folks utilizing the digital signal processor attaches it to a copper medium and trying to also make a run for this connectivity opportunity. And they could go up to 10 meters in length, but again, because of the requirement for a digital signal processor, higher cost and higher power. So here it shows, you know, if you're just going through a low data rate at 100 gig, it didn't seem like such a big dispersion in terms of power use between all substitute products and a Spectra7 enabled active copper cable. But when we look at 800 gig, the difference is huge. We're talking 12 times more power on the optical cable at 28 watts comparing to Spectra7 enabled active copper cable at 2.4 watts. And here we wanted to do a straight comparison on the next best, right? And instead of optical cable, the next best may be the active electrical cable. And the application is going up to 4 meters for both of us. They could go a little longer length, greater than 4 meters, but our target market is the top of the rack and top of the rack or adjacent rack. And therefore, the only distance they need or the length they need is only up to 4 meters. And it's not necessary for more than 4 meters. And that's the target market that we're going after. And we think that the operators would not want to spend 20 watts on a cable if they could do it with 2.4 watts. And it's because power is very, very expensive. In addition, they would also utilizing our technology to have a lower latency, less than 1 nanosecond. Whereas with an AEC, it requires specific link train between the switches to the cable and from the cable to the server, and therefore create latency. And also, it's extremely expensive. Those digital signal processor will need to go through, power, lots of power, but also very expensive to make. You talk about, you probably heard about the nodes like 7 nanometers, 5 nanometers, 3 nanometers. Those are all very expensive to do, while our solution is definitely using an analog redriver enabled approach, very elegant, and we don't need to re-scramble the data from one end to the other. Lower cost for CapEx in this case, and definitely much more result on lower consumption of power and just as fast. So the biggest savings, however, for the cable, for the data center operators definitely is in the power. So what does that mean when we look at 2.4 watts versus 20 watts? Well, you can see that for 100,000 server, being in a data center operator, typical size, you would see that they would have a savings of 3.5 megawatts. Well, no matter how much they pay, in this case, using a 5,000 per kilowatt hour per year, you can see that there will be saving $17.6 million per year. And this does not count on all of the cooling they don't need to do when they have to put that 4 megawatts through the servers. And by the way, if they're using 4 megawatts for using AEC 400,000 server, it would dwarf the amount of power they need to use just for the for the switches. And it's definitely very power hungry. So not only do they get an TOC, a total cost of TCO, I guess, a total cost of ownership for running a data center using our technology, but also they save on CapEx. So I just wanted to repeat the value prop. There is no reason why they should use for top of the rack, less than 4 meters on anything other than an active copper cable that use just 2.4 watts. So how big is this market? Well, there are a lot of research that came out ever since, everybody knew that the death of I guess, DAC passive copper is coming. And here the current DAC technology passive copper cable can't scale with the speed coming from the next generation server design, and the expected 2/3 of the cloud server market, connectivity market, that is, to be active copper. And from a revenues perspective, according to 650 Group, it's about $3 billion by 2026. And with that, knowing the $3 billion is applied to all of the internet silicon within the data center, we had estimated that the top of the rack and next to rack target that we have on the segment that we're trying to address within the data center is about $1 billion by 2026. So with that, we were looking for a long-term operating model. Even with a minimal market penetration, is going to enable us to achieve significant revenue growth. And we share with you that we have all of this relationship established with the North America data center operators, as well as those in Asia. We also have a very deep relationship with all of the top cable manufacturers that enable us to achieve this revenue. And so we are targeting 60% four-year CAGR with a gross margin of 60 to 65%. As you can see, last year, you may notice the first half of the year, we only derive a 43% margin for the first half of the year because of the supply constraint situation where we have to pay premium and hot lots and queue time and whatnot that the entire supply chain was charging. And we have recovered that. I'm very happy to report in Q1 2023, we just filed our financials yesterday, and being able to share with you that we have now achieved a 63% gross margin for the quarter. Very exciting time for us. EBITDA margin target in a longer term, 25 to 30%. Again, Q1 2023, our EBITDA loss was about 70,000. We understand that Q2 and so on will have some one-time expenses. We're also contributing and investing into other areas where we could drive the growth. But we're still targeting by the end of this year with the revenue projection of a record year to continue delivering great EBITDA result and targeting a break even by the end of this year. So our model is definitely a very scalable model. It is a fabless manufacturing, so meaning that once we have helped our customer get mass production underway, all we need to do is really rely on our fabless supply chain by placing purchase orders with them and therefore ushering them along, make sure that the wafers get produced and at the end the customer gets their product. Very scalable. So lastly, on the key financial highlights, I wanted to share right now, I guess as of May 1st, our stock price was at 60 cents Canadian. Market cap about 17.4 million. We're definitely in a very good spot right now for our investors to re-up and dollar average their portfolio. And last 12 months revenue through March is about 12.3 million. Total gross margin is about 54.3%. As I've said, We started the quarter, this 12-month quarter with a 43% margin. We ended it with last quarter at 63%, as we have recovered and not have to pay for those one-time fees. Insider ownership, this is just board of directors and Raouf and myself. In total is about 12.6%. We have long-term support of shareholders understanding our value prop, and now is the best time for the company as the inflection point is coming. And finally, the only thing we have on our balance sheet that brought to your attention is our convertible debt. We have repaid the last convertible debt with a new convert in July 2022, about $6.6 million. It matures in 2024 at the end of the year, and conversion price of $1.02. So with that, thank you very much for your participation, and let me take a look at your questions. Okay, so question, if the market is $1 billion by 2026, will the ramp be a straight line or faster initially and slower toward 2026? And to answer that question, let me go back to this slide. If we take a look at in 2023, the blue on segment addressable market, that segment addressable market, we believe is still majority of that would be DEC, would be passive, because the equipment for North America has yet to be delivered in mass production. So I think it's going to be a slow ramp in 2023, and then in 2024, probably go into a much faster path, and then eventually get into the billion. So I would probably say it would be initially slower, and then it will be faster toward the end. And one more question, another question was, with recent capital raises, do you have enough funds to support the ramp in production, and will more capital be required given the size of the market? I think that that would be a very good problem to have. We currently have raised enough money to believe that we would get to EBITDA positive. And we definitely are looking at, all method of getting, whether or not we need more additional working capital. So I'll just do a quick math for you. So for example, if we go to one of our foundries and we said we got a big win and we wanted to share the risk, maybe they wouldn't require at that point prepayment, and then that would be a working capital decrease for that.
Yeah, but Bonnie, I think we can add that we have no plans, right?
Yes, we have no plans yet. So, but we also have, relationship with foundries where we didn't have to prepay as well today, and we are trying to get all of that together. So really is the need of working capital is going to be a function of how well I could manage this. But yes, if we have an order for 100 million tomorrow, we definitely do need additional working capital. That would be a high-class problem to have. Raouf, did you want to add anything else?
Yeah, no, the only thing I would say is we really want to stay away from raising more capital. That's our goal, is to self-fund as much as possible going forward, and that we're comfortable after this last small raise that we're in good shape to do everything we need to do.
Yep, that's right. That's right. And so another question is on, are you currently supply constrained? And we can share with you that we are seeing the outlook of supply being opening up. And so, that's definitely a good sign for semiconductors actually at this time. That's right.
That's right. It is opening up, but the lead times are still very, very long. So, there appears to be a lot of backlog that's pushing out lead times. And so, yeah, the supply is starting to open up, but the delivery schedule is really very, very long, which is kind of a problem.
Yep. However, it's definitely positive for us as the supply become available, not having to pay extra. So you can see that in the gross margin in our last quarter, and last 2 quarters, actually, we have recovered to 59% in Q4 and then at 63% in Q1. Another question was, Richard, we know you. With many design-ins that you have announced in the past, why have sales been slow to take off? And it's mainly, we have lots of tractions, as we have shared with you in the past. If we take a look at where we were in this chart right here, we believe that at the time when we have shared with you, we were very excited about all of the tractions we had at 400 gig. We have now realized, and I think the industry has realized, that the North American data center operators, because of COVID, has skipped over now from the 56 gig per lane and moving into the 800 gig. And they're going after the 100 gig per lane equipment that is now due out. And this is a reason why you started seeing a lot more research, or actually we have seen a lot of research in 2022 to talk about where this is going. And now I think as an industry, we believe that 800 gig is now for sure gonna be here. Now the question is, when are they gonna ramp? But the point is not if, is when, and that the data center operator will need to switch over from the DAC, from the passive, into an option. And that option is all for us to grab because we have such a good value prop. Another question, are we dependent on new data center constructions or large expect upgrade in the existing centers? You know, if you take a look at that slide about the CapEx requirement, is $377 billion in 2026. And of course, they're multi-billion dollars, hundreds of billions of dollars today still. So we would think that unless they are constrained by real estate, it's probably going to be new build first, because if it's already operating, you got to transition. And but I think, you know, it would be the first wave on new build, and then the second wave on retrofit. Another question was about competitors introducing similar products to our offerings. One thing that's good for us is to see that there are 2 other companies that has announced that they enter into this market. And of course, it's another validation of this sheer size of market that attracts the interest. And those 2 companies are MACOM and Samtec. We understand that we have not seen Samtec anywhere. We have seen MACOM in OFC and DesignCon recently as well. We believe that we have a superior product, and definitely there is room for all of us. Your value add is very compelling. What is the pushback for those who don't use your product? So that was a question. And the only thing we can say is that I don't think anybody has not used our product. I think they have not used anybody's products for that matter in looking at the 800 gig because the equipment is not there. In the case of China, they have definitely selected us. Well, Tencent has selected us to be there, and which is what drive a lot of the growth. And it will continue to drive a lot of growth as they're coming back out from COVID stay-at-home policy now that's easing. Another question is, can you speak to EBITDA profitability by the end of the year? What are the puts and takes for that? You know, really the reason why we could get to EBITDA positive, or even in the last 2 quarters achieve EBITDA lost of 38,000 lost, as well as 70,000 lost, is really about the discipline we have on how we operate, how we manage our operating expenses, and coupled with just delivering great services, making sure our customer get a great product. And those are 2 things that we'll continue to do. And obviously it will require a revenue and gross margin to maintain where they are. So that's what we're targeting. And again, this is not because we're going after such a big market. It really is a temporary thing, if you will. It's really about getting to traction. We talked about the minimal, market tractions and penetration is going to deliver us with great revenue growth. And we've been so thoughtful, as you can see in our operating expenses, about how we spent. It's really about the discipline.
Hey, Bonnie, this is Anya. We're actually over time now, so we're going to have to conclude this. It's really been an interesting presentation, and it seems like you are at an inflection point, and we look forward to be following you. There are some questions in the queue still, and I'm sure you're available to anyone who wants any follow-up. I think you have a pretty busy one-on-one schedule, but if you want to take a meeting with the management, reach out either to us at Sidoti or to the management team directly. Thank you so much for joining us today. And Bonnie and Ruth, thank you. I want to hand it over to you for some concluding remarks before we close it down.
Yeah, I would add my thanks as well. It's been a great conference for us. We enjoyed it, and thank you everyone for listening to our story. We're very excited about where we are in this inflection point in active copper cables. We think it's going to be a great thing for us and for our investors. So once again, thank you. Go ahead, Bonnie.
Thank you. I share the same. And
thank you, everyone.
Look forward to talking about.
Okay, right. Thank you.
Yeah.